Welcome back. Broader market funds in the spotlight today. By broader markets, we're typically going to be talking about the small cap funds. AMFI data has showed that small cap funds have seen a record rush of 5,400 crore in the month of July, even as the large caps saw outflows of about 2,000 crore rupees. So basically, money is being pulled out of large caps, and it's being deployed in the small caps. So that's what the investors want. Data in the fact sheet also shows that the small cap space has seen a remarkable surge in flows since November of 2022, when they stood at about 1,300 crore rupees. This increase is undoubtedly in line with the stellar rally that the mid and the small cap indices have seen, and individual stocks in the first half of 2023, with small caps holding the sway. What's the way forward for the small cap funds, and what's leading to all this optimism? We're now joined by Anand Varadarajan, the business head of institutional clients, banking, alternate investments and product strategy from Tata Asset Management. Anand, afternoon, and thank you very much for that. Tata Small Cap was one of the funds which a couple of days back said that they are going to be stopping inflows into the small cap funds X of SIP. So if you have an SIP, you can continue to invest and your money will be taken, but lump sum, discretionary, one-time investments in the small cap fund will not be allowed. Can you take us through the reason behind this?
Good afternoon. Thanks for having me. So essentially, I think what we were seeing, and you're right, that small cap has been seeing a lot of strong flows, net inflows in the last couple of months. We've been no exception. What has happened really is, small caps, there are three things that you need to look for. You need to find a company which you want to invest. You need to get the kind of quantities that you need to buy. Volumes are not very high in small cap. And you don't want to unwittingly drive prices upwards by chasing stocks. So you want to have it in the kind of quantity that you need and at a price that you wish to pay for. I think all these three things coming together in the last couple of months, has been a little challenging to find all these three things coinciding. And that is the reason why we thought perhaps it may be prudent to stop lump sum investments, because then at least you slow down the flow at which you're getting money, and you don't end up chasing stocks. You take your time to deploy the cash that you have in the portfolio.
Okay, so what is the cash with Tata Small Cap Fund right now? And if you can compare it with, say, 3-4 months before this time period when we were not seeing the stellar rally in small caps?
Essentially, we would be about 14-15% cash in the portfolio at this point in time. Contrast that with 2-3 months back, we would have been more like 10-ish. And that's the reason why we thought perhaps let's deploy this money. And SIPs and STPs are still allowed in the fund, but we chose not to accept lump sum investments.
So what's the size of the Tata Small Cap Fund versus 6 months ago? Because till now, you all were accepting money, which ballooned your fund. So what is it now?
We would be about 5,000 crores right now. A couple of months back, we would be about 4,000 odd crores.
Okay. Anand, what does it mean for the small cap funds right now, or the small cap space right now? We've seen stellar inflows coming in at record highs in the month of June. As a fund manager, what do you say? Are there not enough spaces available? Do you think this rally will fizzle out? The valuations are high. What is the thought process right now when it comes to AMCs deploying money here?
So one, I don't manage the fund, but we are very constructive on small cap as a category. We think that whatever we've seen in small cap, there are very many opportunities that we can see. Just that the only word of caution that we want to have when we're looking at constructing our own portfolios, we've seen that you do not want to unwittingly end up chasing prices upwards. Because the challenge with small cap is that these stocks lack free float, and because the quantity available is less, and they sometimes trade on thin volumes, you have to wait for opportunities. And if you don't get quantities, and if you keep chasing those stocks, something what we call as impact cost which is you yourself end up driving prices upwards, is something that you want to avoid in your portfolios. And
So
that's
you're
why
uncomfortable. Got it. So Anand, you're uncomfortable investing at current levels. You don't want to keep pushing up the premiums on small caps. So what would be the kind of levels on, would you want a 10% correction on the small caps before you would be comfortable deploying the 15% cash on your books? Would you, want it to be even lower?
No, I only mentioned that we are constructive on small caps, but just that quantities are not available and you don't want to
Okay.
chase those stocks. So I just wanted to correct that understanding that we are not uncomfortable with small caps. We're very constructive still. I think despite the rally that we've seen, we think that if investors come with a long-term time horizon, I think there is enough opportunities that we see in the space. But what we want to be also cautious about is not chase these stocks, so that you don't want to come under that pressure of buying something at any price. And that's the reason we are slowing down our cash levels by trying to reduce lump sum investments inflow into the fund.
Okay, take that point. So there's still many opportunities available in the small cap space and you continue to remain constructive there. In that case, according to you, what are some of the sectors in the small cap space which are seeing higher inflows? Is there a particular, I would say, sector which investors are, or I would say the fund managers are looking at or looking at deploying money into?
I think we're very constructive on capex, industrials, financials, manufacturing as a sector, and you will find some of those things in our portfolio. And we remain quite constructive on this. We think that over the next couple of years, these are sectors that could possibly do very well. And that's what we find in terms of our top sectors.
Anand, how long do you think you might have to restrict inflows? Because some of your competitors are still accepting the flows. So you run the risk of a market share loss in a way.
Yeah, but I think it's important that we, maintain the investment experience of our investors. I think thus far they've had a reasonably good investment experience, and just to ensure that that is maintained, we'd like to first try and see how quickly we can deploy what we have. And once we think we are ready and we've been able to deploy, then we'll consider reopening.
What have your investment managers told you? How long will it take for you to deploy?
Plain bound, it's more to do with at what rate we deploy. I mean, if we are able to deploy, see, the good part is that if with lump sums being restricted, the inflow in the fund is now constrained. It is just that if you were to start deploying it very quickly, we should be able to reduce the cash levels quite meaningfully. And once we get to comfort levels, perhaps then we will consider reopening it.
And Anand, how do you look?
I can't put a time frame.
Okay, take that point. How do you look at valuations right now and compare it, say, with a large cap? Because I was reading a recent note where some of the analysts suggested that there's still a lot of comfort. Micro caps or small caps are trading at 16 to 17 times versus large caps at 24 times. Do you think there is still more headway or headroom here? How does it compare in terms of earnings and valuations?
I think if you were to look at there was some, basis are some internal report that we had seen. Small caps, if you were to look at, are still at par or slight discount to large caps over long periods of time. And that's the reason why, from a valuation perspective, we are not very concerned. Again, it's something which is stock specific. Can't make a broad brush on the index, but broadly, when we look at the portfolio stocks that we own, we are quite comfortable at the valuations that exist, and quite constructive as a whole on small cap.
I don't know if there is an answer to this, but Anand, is there any number on the value or the number of investable small caps in our markets?
Tough one actually, because small cap is a very large universe. I mean, what is defined as small cap strictly is 250 first stock to 500 stock by market cap. But strictly speaking, this is really the small cap universe. Anything beyond that also.
No, but I meant some of them don't even have very high liquidity. So although they may make the market capitalization cut off, they are in that band, but the liquidity is not. So just wanted to understand for you, what's the investable universe? Because ultimately, the large inflows are getting directed into into a funnel of a very small universe of investable stocks.
That's right. It'll be a couple of hundred stocks because in terms of coverage, in terms of information that you get from management, in terms of earnings and so on, I think coverage becomes a challenge as you go deeper. And hence you will be constrained to kind of look at the entire universe. You will have to restrict yourself to what is possible to be covered in terms of earnings, disclosures, and so on.
Okay, so small caps have low liquidity, and that's the reason. And also, as you said, smaller portfolio as well. Number of stocks are lower in this universe, so those are a couple of things which need to be considered before small cap investing as well. Thank you, Anand, for joining us today and taking us through your rationale of not accepting lump sums here, and generally on the small cap space as a whole, because that has been buzzing off late. All right, that's the word coming in from Tata Asset Management Company. We'll slip into a short break. Up next, we have our special segment, Mid Cap Spotlight. We'll put focus on Elecon Engineering. Stay tuned for that.